right, Gilead, G-I-L-D, on NASDAQ, about a $92 billion company, so that's no small company. This is in our series of COVID-19 stock investment ideas. This is 7 of 12, and this one I really quite like. So Gilead Science has been off and on our radar screen for a while. Or I should say on it the whole time, but in and out of our portfolios for a while. And I think our model does a really good job with this particular one. As return on capital is rising and staying high, stock's doing well. It started to come down. For obvious reasons as well, that some of their drugs were coming off patent and going to generics, and so it would make sense that the financials followed the what was going on in the market. So this one makes a lot of sense from our modeling perspective. Now, they also happen to be into viral treatments, treatments for viruses, and obviously this kind of fell in their lap, the COVID-19 issue. And they have a drug that might work. It still needs to be tested. It's certainly not guaranteed. This is not a vaccine, though. It's a treatment. It's like a drug treatment. And I'm going to say this name wrong, but I'm going to try my best. I have it right here. I'm going to read it. Remdesivir. I think that's the closest I'm going to get to saying it properly, but it's actually been a drug that's been part of their extensive research on antiviral type medication. So they're going to be testing it extensively and fast tracking it and everything they can do, of course, to be see what happens. As I said in all of this series, is do not buy this strictly for that. If there's other reasons to buy it and you get this as a bonus on top of it, then it's probably an okay idea. And I think that is definitely the case here, and I'll show you what I mean. The return on capital profile immediately jumps out at you. It's a pretty good rate of return for a long period of time. What's hard to see is because it's off the chart, it's hard to see where the peak is. But I can read it out to you. It's 2014 was the peak, and let's see, does that line up with the peak in the stock? Pretty close. Looks like the peak of the stock was 2015, and then it really started to roll over. So in 2014 we had an 88% return on invested capital, and remember, we calculate a very conservative way, and it started to drop. Then went to 60, and then it went to 34, then it went to 25, and then it went to 17, and then it bottomed out recently at about 13, and now it's starting to creep back up just a little bit. So I think we've hit the bottom of return on capital, which is always a good time to be in a stock. If you can find that bottom of their fundamentals, typically that'll be a great time. We simplify that and just say bottom of a return on invested capital. And when it starts creeping back up, it's usually a good time. The statistics bear it out. I think this case is no different. And now we got a potential solution for COVID-19. So right in there, I'd say in terms of the drug ones we went over, this would probably be my favorite for the situation we're in. In fact, stock's done quite well over this last period, where everybody's down, literally, no matter who you are. In 1 month, it's up 0.26. Okay, not by much, but at least it's up. And in the last 3 months, it's up 10.46. Okay, so I really kind of like this Gilead right here and right now. I think you can, inch your way in, if not take a full position even. And even if this drug does not work, this is a quality company that's kind of bottoming out at with some of its other businesses or other drugs. So there you go, Gilead, G-I-L-D, on NASDAQ. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or a retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.